Lower inflation and yields help springboard Bitcoin towards 110K. But optimism fades a touch as the Trump inauguration brings little in the way of concrete crypto announcements. Vols get smashed back down from pumped up levels as we don't seem ready to break out just yet. But Cool Skew is back and hedges have been getting burned. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. I got my man Dave in the studio with me from FRNT. And, well, the inauguration's done, and we are not breaking out. What's going on, Dave?
No Trump pump on the inauguration.
Well, there was a little pump, but it didn't last, did it?
It didn't last. Well, the pump, I guess, came before. I think we're spoiled in crypto at times. We've had such a big move. And obviously he's making a lot of noises around what he's going to do in the space. I don't think any of that's changed.
No.
It's probably a bit much for him to think that he was going to focus his
speech on it. It was a bit like Nashville last year, right? Where everyone was like, he's going to announce something, he's going to announce, and then you rally into it. He's like, and what?
Yeah. So I just think maybe a little bit of patience. And yeah, I listened to things yesterday and I was like, there's a lot of things he didn't talk about. I mean, this is a guy who's obsessed with the stock market. He didn't really talk about that. So I don't think it means he's not going to follow through on things. So.
Macro was good this week, though, for crypto.
The macro's been really good. So we spoke last week about how I felt US yields look stretched.
You nailed that.
Top out. Yeah. So I think we got to 482 on the 10-year, and that's reversed quite quickly. A big part of that, obviously, we had a softer inflation print in the US, like core inflation ticked lower. So it's kind of calmed a lot of the fears that there's this like pickup and resurgent inflation.
And then Waller came in super dovish as well.
Waller came in dovish, just kind of cooled the jets a bit. Again, I think that's interesting because I think the Fed get worried every time 10-year yields get near 5%. I think that's kind of their line.
Walk it back down.
Yeah, because again, they know they've got $7 trillion, dollars of debt that the Treasury needs to roll over this year, and they all need to keep rates as low as they can keep them. So yeah, I thought that was interesting. I mean, we had really weak inflation in the UK, or in terms of the disinflation numbers coming off. Service inflation fell quite a lot, and I just think we had such a strong narrative into the year about this kind of global reflation, which I never bought into. Because outside the US, which I think's living off this sugar high from the pre-election spend that was discussed last week, the rest of the world's struggling. We've got a global sort of slowdown underway. I mean, we had really soft GDP data in the UK. I think it was zero growth for the last quarter of the year. Germany just confirmed that 2024 was, I think they were minus 0.3% growth.
Yeah, and then add to that all the tariffs that are going to come in, right?
All this stuff, and obviously China in a deflationary spiral, that's not stopping anytime soon. So it's not clear to me where this resurgent inflation comes from. So I was expecting that we'd start to see that kind of fizzle out a bit, and I think there were signs of that last week. Bond market looked stretched. That started to reverse. Another thing, and you mentioned the tariffs, obviously he didn't give us any, people thought he might executive order and blanket tariff stuff yesterday. He didn't. I felt Trump, and careful, I'll get hammered from people on this, but I felt there was a more consolatory tone to him yesterday, I thought. He didn't go aggressive, a few silly things around.
But then he did. But then last night he said something about 25% going to be slapped on in February, though, right? For Mexico and Canada.
But there was obviously the headline the other week that they're going to phase some of this stuff in. Also, which didn't get the attention I think it should have, on Friday he held a call with Xi, President Xi, and it was all as Trump does. Everything's great. We got to do great things together. Help world peace and all this sort of stuff. But there's definitely a sense of, I think him, as we said, he's trying to bring people to the table. But actually, there's a view to let's cooperate, let's negotiate. And so I think it'll be a lot less severe. And I think that's partly supporting the bond market here because, 10-year yields is back down to about 455. So it's quite a reversal from the highs. And I think the fact that they might just phase in tariffs, the fact that he's very open to discussing things with China, I think sort of bodes well. And I think if you look at dollar CNH has come off quite a lot. So I think that's the market.
But the wild card is Japan.
Japan.
This weekend, this Friday, they've got a Bank of Japan meeting. Markets expecting 25 bip hike. Last time that happened, markets didn't love it so much.
They didn't love it so much. It's interesting. So right now, the macro looks great, right? Yields have topped out. I think the dollar's reversing, partly on the relative growth stories, like seem a bit stretched on both sides. US too much, rest of the world probably too little. So we probably see a bit of a weaker dollar there. Yields reversing, always good. Bank of Japan is a risk.
But what is the risk there?
So the risk with the Bank of Japan is like the world's biggest creditor, right? And they own a lot of foreign bonds and assets. So I think it's on like 4 or 5 trillion of net foreign assets they own. And a lot of it, people talk about this carry trade because rates are so low in Japan. They borrow in Japan and invest in the rest of the world and buy assets across the rest of the world. So the fear is as soon as rates start going up in Japan, they sell all those assets and just repatriate the money back home. So that's the big fear, right? And the macro doomers love it, right? Now, I said back in August, I was very quick to dismiss the move. I felt that was more of a leverage momentum trade that blew up. I.e., everyone was kind of long dollar yen, long Nikkei, long Nasdaq, and then all of a sudden dollar yen started to fall, and I actually think that was a trigger, and partly because of the Bank of Japan raising rates, but the broad dollar was under pressure as well. Dollar yen started to collapse, and all of a sudden that highly correlated levered momentum trade unwound, and everyone was talking about, oh, this is the big like carry unwind. Now the reason I'm relaxed about it, and it probably is like a little risk out there this week, but the reason I'm relaxed about it and why I don't think it leads a bigger kind of global bond sell-off, we're kind of expecting it. They've telegraphed this over the last week or so we're expecting it. I also think like the Bank of Japan, they kind of got very nervous back in August, like when everything started to sort of sell off. I think they'll deliver it with kid gloves and be very soft around it.
Like a dovish hike, basically.
Yeah, and then the other thing, that the point that I make, and there's so many like macro guys who keep talking about carry unwind, and I don't know whether they're just purposely just trying to like doom post on it.
That's what gets hits.
It does, yeah, and maybe we should put out some doom on this, but the big carry trade, right? This 4 or 5 trillion or whatever, that's right. Most of it is with the big pension funds and the life insurance funds in Japan invest abroad. Now they are super slow to change their portfolio allocations, right? So firstly, the idea that they're going to just go and sell everything, like trades that they've an allocation that they've had on for like decades, like they don't just start shifting their long-term allocations around just because we've got 25 bips higher yield in Japan. The other thing as well, just by the sheer nature of carry, right? Like you're borrowing in a lower yielding currency to invest in a higher yielding currency. Japanese yields still on an absolute and relative basis still very, very low, right? So you've got 10-year yields in the US up at like 4.5%.
Yeah, and they've risen quite a lot in the last 6 months.
So there's nothing for me there to say that they're gonna like everyone's gonna start unwinding that trade anytime soon. So that's a long way off, unless the Bank of Japan got much more aggressive. But actually, their economy is pretty soft as well, so they're struggling as well. So I'm not worried about that at all. The other thing as well, what I do think it will, they tend to, Japanese investors will then, as yields go higher, that it makes it cheaper to hedge out the dollar risk or the local currency risk. So they'll be selling dollar yen. So I think it will feed a weaker dollar. So actually, and obviously, as we know, like weaker dollar, broadly weaker dollar is good for liquidity, I guess. So I actually think what we'll see this week is bonds will be all right. I think the US is much bigger for the bond market. So if Treasuries yields keep falling, then rest of the world yields come down. And then Bank of Japan, I think you see dollar yen lower as a lot of these big funds in Japan up their hedges on dollar yen. Dollar yen comes lower, broadly weaker dollar, risk is pumping, everything is A-OK.
All right, there we go. So still bulled up.
So changing tact. obviously, I'm always asking you about, how you're hedging stuff, how you're harvesting yield in this space. I see you've cheekily launched a few vaults that capture some of these trades.
Yeah,
Tell me about that.
It's been a long time coming, actually. So I've had this idea for probably best part of a year, but back in the day when those DOVs, DeFi option vaults, used to exist, they're basically systematic strategies using crypto options, right? Pretty bog standard ones, nothing too complicated, no rocket science.
Like covered
calls, things like that. But there were a few innovations. There were a few things that felt that were missing, right? There wasn't like a systematic hedging strategy where people could stick their money in a vault and put hedges around it and have someone kind of managing that hedge. And also a lot of the income strategies were quite naive. They were just blindly selling vol in a very volatile asset with no protection, right? So I've made my own tweaks and I've kind of done my own thing, and I've launched 3 vaults. One's called Hedged Crypto, another one's called the Crypto Wheel. The wheel strategy is a common strategy in options that people may or may not be aware of. It's like cash covered put selling and covered call selling, basically, and you kind of alternate it based on whether you get taken out of your position because the call strike goes in the money. And then you're in.
And start that again.
So the crypto wheel is like where you own an asset, right?
Yep.
You call overwrite against that asset, right? Simple call over. So you earn a yield on that. And then if the market goes up and you breach the call strike, then you get taken out of the asset. You get called away. But now you've just got some cash basically in your account. So against that cash, you then start selling puts. And you'll earn a yield off the puts that you sell. So you'll have your cash. You'll earn the yield of the put premium that you receive until the market drops below the put strike, and then you get your asset back, basically.
Yeah, because
so that's the wheel, and once you get the asset back, you start call overwriting it again.
Right, got you. Yeah.
So the wheel strategy is that, which is going round and round, basically, right? So if you're in an asset that's really volatile and it's whipping around like this, then it's quite good for the wheel strategy because the vol's going to be high. You're going to be getting quite a lot of yield, and yes, you're going to be getting taken out of your asset, but you're going to be given it back as well because there's enough movement that those strikes are getting breached.
That makes sense. And what was the first vault you mentioned?
Hedged crypto. So that's where you park a certain amount of crypto into this vault, and then you have a hedge around it, whether it's a put spread on the downside or a risk reversal because you're happy to give up some upside, or a put spread collar, which is a put spread and a short call. So the idea is that you're managing that hedge through time to try and monetize the drops and maybe roll the hedge or reduce the delta of the hedge in drops. And then when the market rallies back again, you're a bit more aggressive, selling some calls to kind of get some premium back. So the idea is to try and create a strategy that doesn't bleed too badly, but hedges at least 50% of your exposure at all times, right? Yeah. So it smooths your P&L. It allows you to stay in the game in crypto, participate in 50% to 100% of the upside, depending how quickly that upside happens. But if you get weakness, you're hedged out for at least half of your risk, basically, right? So that's the hedge crypto. And then the last one is a crypto income, which is just a systematic iron condor selling strategy. So I don't like selling naked strangles. It's just not a good way to risk manage. And
for anyone who doesn't know, an iron condor?
It's just where you sell a strangle, but you buy a strangle a bit wider. So you cap your losses, basically. And the idea is to do that, but then actually risk manage it in real time. So if you do a weekly iron condor, but the market suddenly moves 5% for whatever reason and starts breaching one of your call spreads or put spreads that you're short, then you can roll those to a following week and kind of buy yourself some breathing space, basically, right? Yeah. So that's something that I do for myself, and I risk manage in real time, and I share it with my subscribers. So the idea with these vaults is I'm not taking anyone's money, right? I'm not regulated to do that or anything, right? I'm just an educator. I run my own money in Deribit, and what I've done is I've created sub-accounts that are these vaults that I'm trading some of my own crypto with, and I'm educating my subscribers as to what I'm doing, when I'm doing, and how I'm doing it, basically.
And they can go in and replicate that on Deribit themselves.
Yeah, exactly. So if they've got Deribit accounts, they can do the trades that I'm doing, or they can do slightly tweaked versions if they want to do it differently to me. But the idea is they're getting educated about how to run their own systematic vaults, basically, rather than paying some structured products guy to do it for them and knowing that they're going to give away some edge for that, basically, right? Yeah. That's the idea.
Oh, good stuff. So how do we get
Well,
do I get
it's part of my
part
of my subscription service that people basically
Interesting.
anyone who's part of my membership will basically have a look in the vaults, right? That's basically it. But on that point, I mean, the people that I spoke to, our special guest this week, are the Greeks Live guys. So they're actually providing, analytics and execution services and risk management services to people like us in the retail space who are trading on Deribit. And that's going to actually make life a lot easier to manage this stuff. So it's funny, I haven't actually looked at their platform yet, but I intend to, because it might make my life a bit easier managing these vaults as well.
And executing the trade.
So I spoke to the co-founder and one of the product guys, but it's a really good conversation. So check out what they had to say. Hey guys, it's Imran, and today's special guests are from Greeks Live. I've got Jeff Liang here, CEO and co-founder, and Alex Yip, product and marketing at Greeks Live. How are you doing, guys?
Oh, good. Oh, good. Thank you. Nice
Fantastic.
Good to meet you. So, why don't you tell us a little bit about your backgrounds, how you got into crypto, what you did before the world of crypto?
Sure. I guess I will start from me here. So actually, before I was in a traditional business, I was in the international trading business for bulk cargoes. It's a quite traditional one, and I'm in charge of the brokering of shipping contracts for my clients. Then in 2017, I come to know Bitcoin, this Bitcoin thing. And after 3 months and 4 months of pondering, how does that works? And I decided I should hold some of the Bitcoin for myself. That in 2019, I come to know this crypto option trading, and I'm onboarded to Deribit and start trading. And also, I met a few friends, including my partner Gary, and we all trade options together with a couple of friends. Back then, in late 2017, in late 2019, it's a good season for selling vol. The vol keeps coming down, and now time comes to 2020. Then in March, the Black Friday, and many of our friends get their position exploded. We are the lucky one, and we remain our liquidity. And after that, I talked to Gary that maybe, because I know he has an application he developed for himself to trade on Deribit. After this big market incident, I talked to Gary, maybe it's time that we can push your application with these risk control features and trading features to the market and see whether that can help community to trade easier our options. That's how we get started.
Interesting. And did you have an options trading background before then?
No, not really. Not at all.
Okay.
So actually, I learned all the option trading techniques on Deribit. So I read Deribit knowledge base many times, and I find it's a very well-written document. And that's my menu for option trading.
Amazing. And Deribit actually are one of the investors in Greeks Live. They backed you because they kind of bought into your mission, I guess, right? That is to try and make it more accessible to retail so that they can manage their risk and not just blow themselves up, basically, right?
Yes. Thanks a lot for Deribit's investment and endorsement. So that was done in early 2023. Yeah.
Right. And how about you, Alex?
Yeah, so can you guys hear me all right? Yeah, that's my online name that I chose. Cool. So my background is in TradFi, was at Morgan Stanley for like 4.5 years before getting into full-time crypto. I was never really a trader out of the main office there. I did basically do like back testing, and that's kind of how I got my interest in trading. But, I actually got into crypto via mining Bitcoin and Ethereums, mainly Ethereum. I had a huge farm of like 50 GPUs. And what I saw was, money being created through electricity. And I thought that was really, really interesting. And I remember at the time, my parents were like, what are you doing? Why do you have like all this like graphics cards and stuff? They didn't really quite understand what was going on. But I found there was, issues with mining crypto because like there's a lot of tech issues and I didn't want to deal with that. So when Deribit kind of came out and on the scene in around 2018, 2017 timeframe, I had already known, Bitcoin from 2016, but I was like, wait a second, you could sell options to generate some sort of like form of yield. And it's similar to mining, except instead of like your upfront, capital costs, which are the graphics cards, you're just holding the asset itself, which you're bullish on, like fundamentally, right? Because at the time I had a bullish long-term view on Bitcoin. So I was like, okay, instead of like these graphics cards, I'm just going to hold the Bitcoin itself and consider that, the collateral I need to use to sell options in order to generate more Bitcoin. And I did that over a long period of time. Obviously I lost everything in the I lost almost everything in the first bull run, but then actually the second bull run I actually sold some stuff. But that's really my background in options trading.
Interesting. Yeah, they used to call that synthetic mining, right? I think.
Yeah, I think the QCP guys termed that, and I think Raoul Powell also like used that in a couple of Real Vision podcasts. And I really like that name. It's like synthetic mining. Yeah.
Yeah, this is an interesting one. Obviously, like you say, if you get a period where Bitcoin halves, you're screwed because all your margin is crypto native and just gets wiped out, right? So
I had a few of those. I had a few situations of those. Yes, quite hilarious.
I'm sure there's a way if you could do. I mean, I've launched some stuff at Options Insight recently, and one of them's like a crypto income vault. And so, but rather than doing outright put selling or call selling, I do iron condors, right? So I think you can harvest and earn crypto income because you're long term bullish and you want to accumulate coins essentially, but you can do it in risk contained ways so that you don't blow yourself up when those crazy things happen. Basically,
I saw that. That was really interesting. So it's your vault. It's iron condors. I didn't get the
one of them is, yeah, I've got 3 vaults that I've launched, but one of them is a crypto income vault. I've got a crypto wheel, a crypto income, and a hedged crypto vault. I literally launched them like last week, right? But they're systematic strategies that are using options on Deribit, and I'm basically educating people how they can create their own vault-like strategies to generate whether it's income or yield they want, or whether it's to hedge their coins that they've accumulated over time because they're a bit concerned about the market, stuff like that.
Wow, yeah, that's fantastic. I saw your post. I didn't get a chance to like deep dive into it, but that's really cool.
So cool. So we got your background. So then tell us a bit more about Greeks Live then, because it's not a platform I've ever used, but it's probably one I should use, to be honest, right? So tell us, like, what kind of tools have you guys got for us lowly retail traders?
Sure. So I think most importantly nowadays is we have this smart trading, automatic option trading bots for those retail traders who want to enter the market with minimum spread and minimum fees. So through this tool, clients can select multiple legs at the same time and try to split their orders into a few equal divisions. And they can make the benchmark to mark price, or they can even set a stipulated spread that they want to pay or they want to earn from the market. They want, if they price order aggressively, they pay the spread. And if they can wait, they will price it backwards from the market price. So they will wait market takers to take their order, and they can make some income on the spreads. This one is
So that's execution. That's essentially an execution tool. Yeah.
That's right. Execution. Yes.
And you're essentially chopping up the orders into smaller sizes that they can just, and those prices that the orders are going in at are constantly recalibrating and adjusting themselves when the market moves, basically, right?
That's right. That's right.
Okay.
And if that's a structure that is both buying and selling of options, we have this automatic balanced trading for the traders. So he won't meet the situation that all of his selling legs are filled, but none of the buying legs are filled. So turning on this balanced trade feature, that's automatically, that's by default. And also he divides the portion into 3 portions. Then he is guaranteed that in each portion, he will firstly get this balanced structure all filled, then he moves to next portion. So I think that's a better execution for the trader, especially if you want to avoid exposing one of the leg unfilled. Yeah, in a volatile.
It's certainly something that would help me out because I often spend time, legging into a trade and spending time on the screen, like buying one leg and then selling another leg, and there is slippage associated with that, right? So if I can eliminate my slippage and let your algos do it for me, that would probably help me out, to be honest. So you got execution algos, that's fine. What else have you got? Have you got risk management tools and things like that?
Yeah, sure. We also have risk management that help clients to estimate their maintenance margin to see whether it's safe across all possible prices and all possible IV levels that their position won't blow up. And we have this, in many our retail clients, they are coming to this market to seeking yields. They sell puts, they sell calls, and sometimes they, especially for the new guys, if they want to get their hands on options, selling options quickly, what they know that easier to understand is that to annualize a premium into an APR rate, so they can compare all these option selling with those bigger exchanges. Some bigger exchanges, they offer dual currency products that effectively that's selling options, covered call or covered puts, and they demonstrate this APR to their clients. And when they compare this APR to Deribit quotation tables through our user interface, they know actually they will be better off by trading themselves on Deribit.
So they're seeing how much of the actual yield they're giving up, basically, in the spread, right?
Yes, that's very straightforward. And it's also helpful for those beginners to compare different expiry dates and different strikes, and to choose which one is the best for them, best choice for them.
What about have you got any like position management algos? Have you got algos that basically will take my book position, and if I give it parameters, they'll never let my delta go outside of a certain range, or they'll never let my vega go out of a certain range, and I can tell it which options to trade, to unwind, or just unwind the book so that the delta comes back into a certain level. Have you got stuff like that?
We have some, you mentioned some of our features, and some of them we are trying to develop. So now we have this delta hedging bot that can help clients to control their delta within a certain threshold they set. So we are going to upgrade this feature with recommendation from many clients of our communities. Some of them, they want to initiate the hedge when the spot price moves across a certain point they set. So, and also some of the clients, they would like to hedge the contract fully, as if the delta would become 1 after passing the strike price. So we are implementing these kind of upgrades for them gradually, and I expect we will have that really in 2 or 3 months. And now gradually this knowledge industry, like administration, all these kind of jobs are having AIs involved. We are also working on that. And very soon, our clients will be able to use this AI assistant to analyze their positions and to see whether there is any improvements or something they would like to add or reduce as per their specific risk appetite. Yes, we are building on.
Does your platform have any like backtesting functionality where I could say there's a strategy that I like, if I did it for the last year, this is the parameters, would it have made money? Like, is there anything like that with the historical option prices and stuff?
This is an interesting requirement that actually some of our clients have raised before, but regretfully we don't have that yet. Well, maybe in the future we will try to deliver that.
Yeah, I mean, I'm just talking from the perspective of a retail trader, and if I had to make a platform that pretty much had everything that I could possibly want, I think, yeah, I'd want scenario analysis. So for my risk management, I'd want advanced execution that would prevent slippage, and maybe a bot that can manage my deltas and manage my Greeks while I'm asleep, because this market never sleeps 24/7. And then lastly, yeah, I think I'd want a backtesting engine which would help me generate strategies and come up with new ideas, basically. So yeah, but it sounds like what you're building over there is pretty cool, man. Sounds excellent.
We got 3 of the 4, Imran. We got 3 of the 4. Yeah, it's a really good idea though to implement some like backtesting ideas. So if you like run through like, hey, but the funny thing with backtesting is sometimes you do backtest and then you put it live and then it's like blown up.
Yeah, I hear you.
One, it's like blown up. It's funny.
Yeah, well, people who understand know that you can't just blindly follow a backtest and expect it always to work. But it's just, it gives you some peace of mind, some idea of how a strategy might behave, basically. But okay, moving on then. So let's talk a bit about the vol space, right? So obviously you guys have been in this space for a while, building out tools and stuff. So what are your thoughts? Have you got any sort of particular observations about the crypto vol space itself, how it trades, how it behaves, that kind of thing?
Yeah, sure. For me, I think a big pattern of crypto option, especially Bitcoin option, is that if there is 2 phases that the market can be divided into. One is a typical bull run, like we see in 2017 and 2021. Another is the rest of time is kind of like bear market or like choppy market. So I think these are 2 typical paradigm we are having in this market. For the choppy periods, typically I think the vol of the options are keep coming down. It's coming down and down, and sometimes there is a sudden pump of the vol, but it comes down again. But if we look at the charts of 2013, 2017, and 2021, these 3 bull runs, 3 huge bull runs in Bitcoin history, that we can see back then, because we don't have option market, we can only see the historical volatility of these pricing actions. From looking at these historical volatilities, we see the vol coming up and stay in the region of around 100. And there is for me, the uncertainty for this year is that we see all the past bull run, it's like 4 years, exactly 4 years repeat, right? 2013, 2017, 2021. Now it's another 4 year, 2025. And every time it's 1 year after the Bitcoin halving. Like 2013 is 1 year after 2012, and 2017 1 year after 2016 halving. 2021 is 1 year after 2020 halving. So now we also have this same pattern, and we have this very strong ETF inflow of investor money coming in, and we have this president, pro crypto president. So it makes everything uncertain for 2025. And my guess for this year's fall, it will be very volatile in my guess. Yeah. And now the historical volatility recently, it's just last 1 month, it's just 50%. It's still very low level. And I guess we will witness some big change of this paradigm.
But do you not think the introduction of so much institutional capital, like your BlackRock ETFs, like your Michael Saylor buying 20 billion of Bitcoin or whatever it is, isn't that vol dampening generally? Isn't like the fact that you haven't got this like fast money that gets in and gets out and is very skittish. You've just got this flow of money that just wants to accumulate more and more and more. Doesn't that have a vol dampening effect and might mean that this bull cycle is somewhat lower vol than previous bull cycles?
It's possible. Yeah, I think that's possible. Some investors, they are going to stay and they will hold it for the long term. But to me, even some institutional investors, they will possibly chase a higher price action and sell upon price dumping. Some of the players will still do that. And in general, I think the Bitcoin circle will not be diminished at this moment yet, because how to value the Bitcoin itself, we don't have a consensus yet. As long as there is no consensus, I think the bear and bull market circle of Bitcoin will not be ending very soon. We will still be in these circles.
You think the cycles continue as they have been basically for now?
Yes, but
Yeah.
maybe in a smaller, the range might be smaller. Yeah.
Alex, feel free to jump in if you've got any views around this.
Yeah, sure. I'm happy to. So on the vol discussion, I think we've now have enough data in Bitcoin at least to sufficiently say that like Q1 and Q4 of the year is usually when you see vols tend to tend to be more volatile in general. The market's more volatile in Q1, Q4, and like the vols in Q2, Q3 like probably be a seller unless there's like an event-based catalyst that you gotta like watch out for. But I also agree with Jeff. There are periods of time. I actually call it more like lights on, lights off of like when the crypto market's like really running. You definitely don't want to get in the way, or like fade some of those like strong moves. And I also agree with Jeff that this year should be quite volatile. As a vol seller, like primarily for my own main business, day-to-day actions, tend to be quite scared to be on the short side of things this year, especially, as we're getting the new US president who's, although he's very, pro crypto, doesn't mean that, things can't move up and down like 10, 20%, which is expected moves for Bitcoin. To your point, like what happens with these ETFs, I think by now, like we've seen the success of BlackRock's ETF. I think Fidelity is like comes a second there. These guys could be, I mean, you could see outflows or you can see inflows, right? They're not like married to these positions. But yeah, like I do see it as a vol dampener. I think there are some takes on social media that, this is actually gonna like introduce more vol because there's gonna be options products on the TradFi rails, but like Bitcoin is no longer this small like few $100 billion asset class anymore. It actually takes more money to move this thing to get those like really outsized moves. So yeah, like as much as I would like to see the old 100 vol days back in 2020, where you can like generate, two and sometimes even like 4% of your account equity per week if you're selling like 10 deltas. I'm not sure if that regime
feels like those days are long gone, mate. Unfortunately.
I know, because like I'm just thinking like, hey, how is that possible, to come back? Like we had that massive 2020 March COVID crash, which I was unfortunately short puts on for the first leg down of that, and I took a punch in the face. But I asked myself, what would it take to get back to those like levels? Because it was like that, like 100 vol consistently for like 2 or even 3 quarters. I forgot exactly how long, but Yeah, that might be a memory of the past. And yeah, I'm interested to hear your take if you think that those days will ever come back, because
I doubt it. I think the sophistication of vol players in the space has gone up quite a lot. I think the space has attracted people like me and other people who used to trade vol in TradFi, have realized there's a great opportunity here, have realized that it's a bit of a no-brainer to be trading this space because there are inefficiencies that you can kind of exploit so I think that, along with the ETFs, the ETF options, all this stuff in general, at some point is going to just bring more and more supply of vol. At the moment, I'd argue there's demand for vol in the ETF option space, not necessarily an overwhelming supply. But as the ETFs become a feature inside many real money accounts books, and they just hold a position in Bitcoin all the time, they're going to be more willing to overwrite that and supply the market with more vol, basically. So I think over the long run, it will head that way. But I don't disagree that this year could be quite volatile. I think with the introduction of Trump coming back in, all these new policies that he's talking about, some of them are quite game changing and some of them can be really good, and then he can not deliver on certain promises and it can disappoint the market. And we need to recalibrate to what the new world's going to look like with Trump, right? And no more choke point 2.0 or whatever, right? Where the market actually wants crypto to succeed, where the government is suggesting they want crypto to succeed rather they want to fight it. So I think that does leave us open to pretty wild swings. So I'm quite excited to trade this year, to be honest, from an options and market perspective. Do you agree that, well, actually, I was going to say, in terms of the players that come in and use your tools and stuff like that in the crypto options space, do you think the majority of players still use options on crypto to express directional views? Or do you think there's a lot of pure vol traders now who are in the space? And how does that balance look in what you see?
In my opinion and my observation of our clients' discussion in our communities, and I think pure vol traders are kind of it's a very small percentage for our user base. My guess is roughly 5% to 10%. The other 90% of the clients, they're more or less betting on directions. If they take a long position of options, they are betting it aggressively. And many of them, they are selling those options, but with directions. For example, they sell calls, they have this bearish view of the underlying, or they sell put spreads, naked put selling. They are bullish on Bitcoin price itself. So I think the majority of our clients are doing this kind of trading with direction.
Interesting, because I'm surprised it's such a low percentage. But I guess I'm surprised. But then the evidence when I watch, because I track the market every week, I see how skew's moving around, how vol's moving around, and it always makes me laugh how reactive short-dated skew is to spot. It just chases spot up and down constantly, right? So that kind of shows you that if the out-of-the-money options are just doing whatever spot's doing, right? If spot's rallying, then the short-term skew is bid for calls. And if the spot's selling off, the short-term skew is bid for puts. And it's just so fickle and it has no ability to stay anywhere. It just follows the market up and down. I suppose that tells you exactly what you're saying, which is a lot of the flow is very directional in its nature in the options market, right? Yeah. And then, well, speaking of skew, then what about the longer term skew? Because I noticed that skew in the 3-month bucket and longer is always for calls. So whenever the market has a wobble, the short end skew flips into puts pretty quickly, right? Because people are like, oh, I need short term puts to protect myself, okay? Or I'm bearish, I want to buy puts, but I don't want to buy long term puts because I'm bullish longer term or whatever. But that 3-month and longer skew is just not budging. It's like 4 or 5 vols for calls and it just stays there. So what I want to know is, when is the tipping point where that longer dated skew will actually start to look more like equity skew, maybe, where there is a put skew, a more persistent put skew, because there's a need to hedge positions, right? Are we miles away from that? Or is that something you could see happen later this year? What do you think?
I think we are still in 2 situations. There will be a post skew. market for longer dated options. One situation is that Bitcoin is entering a bear market since like year 2022 or year 2018. Another possible case is that Bitcoin doesn't repeat its strong bull cycle anymore. That it moves like more mild and gradually. So if Bitcoin performs like that in the next 2 or 3 years, I think gradually this cost skew will be diminished. For me, I think this phenomenon is similar to other two phenomenon I observe in the market. You see, many traders, especially retail traders, they like to read, even those people that are not in crypto markets, they read news on these media that whenever there is a big dump of price, lots of perpetual traders get liquidated and a lot of open interest get wiped out. And if there is a strong pump, there will also be liquidation, but the number of liquidated traders and the open interest get liquidated are much less comparing to those wipeouts in price drop. So even in perpetual market, we see that market is it's long skewed. More traders are trading with long positions comparing to short positions. And also, if we observe the perpetual funding rate market and futures premium, in most of the time, it's the long perpetual party to pay the funding rate. And also the futures are having persistent premium. Nowadays, it's like annualized 30%, 13%, or 15% of future premium. So it's been for a long time. This phenomenon can also be viewed as it's traders in this market. They are more likely to long the asset.
It's almost like defining the regime that we're in. You know how you said, like, are we in a bullish regime or are we in a choppy to bearish regime? It's almost like you're saying that, well, when the funding rates are positive and the medium-term skew is for calls, those are almost metrics that are guiding you towards what regime we're in, right?
Yes. Yes.
Yeah, that's interesting. Yeah. So, I mean, I'd be interested to backtest the strategy where you literally make a decision to go long or short or long or flat based on what the medium-term skew is priced at. That's your signal, basically. So anytime the medium-term skew is priced for calls, I'm long. And anytime it flips, I'm out. Yeah. And then if you backtest that, how does that perform? Probably performs quite well, right?
I guess it performs well because Bitcoin has been performing very trendy in the past few years.
Interesting. All right, cool. What are your thoughts on ETH versus Bitcoin? That's something that a lot of vol traders look at. I certainly track that vol spread quite closely. It's kind of blown out quite a bit recently, where ETH realized has been a bit nuts relative to Bitcoin, and it went as high as 20 vols in the front end. Is that a vol spread that you have much opinion about?
I have been closely watching that. Actually, my colleagues are actively trading that, but get his finger burned. It's trying to sell Ethereum vols with delta hedge and try to reap this higher implied volatility. But actually, as we said, the realized vol has been going nuts. So he's not making any profit from that.
Well, not if you're hedging it on a daily basis, you're getting killed. I think the only way to sell ETH vol is to sell something and just let it do its thing and let it range, let it do its... Because the thing about ETH is it's volatile, but it's volatile within a range. It's not just going one way up or one way down. So the trick to sell gamma on ETH, I think, is you do like an iron condor with quite a wide range. You say, right, I'm selling the expensive vol and I'm just going to let it do its thing. As long as it doesn't breach my range, I don't need to delta hedge it. I think delta hedging can often, I mean, a lot of people swear by delta hedging, but I think delta hedging can often be the problem because you're only capturing maybe a 5 vols or something, right, of the implied that you're selling. But imagine if you can just sell premium and not delta hedge it for 2 weeks because the market just stays in your range. That's when you make the real money, right?
That's fine. Exactly. Yes.
Yeah. Cool. All right. In closing, then, I want to talk a little bit about Trump, right? So he's coming in. Literally, today's the inauguration. This will air like in a couple of days. What do you think this means for like the path of crypto this year, maybe even like over the next few years? Have you got a strong opinion around that? And then, yeah, answer that one. And I've got one final one, which is an interesting one.
Okay. Alex, do you have any tip?
I'm happy. Yeah, I'm happy to go first since I am in burger land currently. So the sentiment, yeah, just like the sentiment overall has done a complete 180 here with the Trump admin. There's even, besides Trump himself, there's a crypto and AI czar now who's very, very,
Is that David?
yeah, David Sachs from the All In podcast. So, and he's got I don't know if there's a conflict of interest there because he's actually somewhat, connected with the Solana. But so basically, like,
So why Solana's at 300, is it?
yeah, I think also Solana's at 300 because of the Trump meme coin.
Yeah, we can talk about it in a minute.
Yeah. So, but I think you got to look at this like a poker player, right? So Trump is business focused, he's markets focused, he's economics focused, and then so he's got an interest there to make sure that this market goes up and to the right. I would not be surprised. I mean, the stuff is on chain, right? So you can even see some position taking on spot markets for various, like even altcoins, not just Bitcoin, which I'm sure he has a position on. So viewing that as a poker player, I mean, by the end of this 4 years, you ought to believe that that he has a personal interest in, making sure, Bitcoin and crypto in general, goes up and to the right. So that's my, left curve view. And I think he's assembled a team at the Treasury, Scott Bessent. I mean, they're all very, very markets focused. They know how to, support the economy in times of distress, which I think we could potentially experience. So there's a very, very positive sentiment shift here in crypto. And for the meme coin, that thing running it flipped Doge, I think, in.
Yeah, so basically this weekend, Trump launched a meme coin called Trump, right? And it traded so much volume and it went up 26,000% or something stupid that it basically made his net worth, and he owns 80% of it apparently, right? And his net worth went from 5 billion to 60 billion in a weekend, apparently, right? So it's a bit nuts. And that trades on Solana, right? That meme coin. So Solana's gone nuts and touched 300, or I don't know where it is now. So yeah, I mean, what do you make of this meme stuff? Because it's a bit ludicrous. It feels a bit nuts that the president of the United States is coming in and launching this meme coin, and then Melania launches one straight after, and now they're like competing coins. His son's probably going to launch one if he hasn't already, right? And there's going to be like a family of meme coins. It's like, it feels a little bit like a joke. And I put a tweet out saying that I just feel like this gives crypto a bit of a bad name, this sort of stuff, because I'm not really big in the meme space. And I get, memes are attention. We are coming into this kind of attention economy or whatever it is. I get that. But the fact that it can become the 12th biggest crypto from not existing on Thursday to being the 12th biggest crypto on Sunday kind of makes a mockery of the entire crypto space.
Yeah, it's very discouraging for other teams that are building in the space. I'm with you, Imran. Like, full disclosure, I faded memes for a very, very long time. And I came to the conclusion, like, hey, if you're a trader, do you want to be right or do you want to make money? And I think the answer there is very, very clear. So memes are actually call options with no expiration. And
full disclosure, I own some memes. Yeah. Full disclosure, I own Doge, I own Pepe. I do own some memes. Not a lot.
Those might get it.
Right?
I have a theory that Doge could get an ETF, but yes, it took me a while personally because I faded it over a long period of time, and then it was just
Did that cost money? Did that cost you money fading it? Yeah.
it's painful to just see this because I was just with you. I didn't like them. I thought it was bad for the space, and then my friends that are like, "Yo, professor, are you in on this one? Like, I just made like $30,000," and I'm like, "What?" So you can't. There's a flipping point there. I think it's part of the crypto culture.
But it feels like, you know, the meme stock craze that we had at the end of 21, early 21, right? Where you had GameStop and everything go nuts, and they made a film about it, right? Wasn't Dumb Money? They made that film, Dumb Money. I love that film. But basically, is this not happening again, but in crypto? Like this whole, you buy a meme and you make money if there's enough people who want to follow you and buy it. But if you're the last buyer, you're screwed and you lose everything. And you lose everything in like 2 weeks or a week or whatever. It just does feel a bit frothy, you know? It makes this sort of thing makes me think, oh shit, is Bitcoin about to go to 50K again? Right? It does make me concerned.
Yeah, it did suck the liquidity. You could see, I was watching this in real time. You could see all the other coins go down while this thing went from $4 to $80. Actually, the quotes were different on all exchanges. It was like 80, 71. On-chain was like quoting like something. When you see that, usually you're at like a topping point. But yeah, I mean, it's hard to say that it's like an overall like positive for the space because yes, it's very kind of like zero-sum game-ish. But
yeah, Jeff, you've been very quiet. What are your thoughts on Meetup?
Yeah. I've been always thinking about that, and I've been talking to my friends that maybe what we are looking at memes are what outside looking at us for Bitcoins. I think maybe that's the same judgment. When they look at Bitcoin, they don't see value. They see this stupid thing going from $1 to 100K. And so for me, although actually I'm more conservative than Imran because I don't really own Memecoin. But I think I understand this culture, and I think probably it will be with us for a very long time, maybe forever, because the bubbles will be bigger and bigger if the fiat money keep getting printed out. And
there's definitely a community. There's like a sense of community when you're in a meme, because it's like there's no reason to be in the meme other than being part of the community that likes the meme. You see what I mean? It's like the meme doesn't offer any economic value, but if you tell your mate you've got the meme and they've got it as well, you high five each other and you're both in the same boat basically, right? So it seems to be a way of defining communities, right?
Yes.
Which, you know, arguably can have value, right? Like, for example, if with the Trump stuff, I think apparently, you know, if you got an early look in on that thing if you were part of a certain community, right? And you know, so yeah, I understand that economic side of it, but it's just the sheer scale that these things can grow to in 2 days is becoming quite farcical. And like I say, when you got a crypto project that's been around for 10 years and it's been building, and suddenly Trump comes along and his thing's worth more in 2 days, that, as Alex said, that's quite disheartening, I imagine, for some people in the space, right?
Yes. I try to be myself. Try to focus on what I'm good at and what I'm interested, and not get distracted by all these dramas.
So it is a distraction. I think it is a distraction, but it's one that's making and losing people a hell of a lot of money. So it's not about to stop today, is it? So it looks like it's just getting started. If Trump's doing it, think about all the celebrities that are going to be launching memes now, right? All right, guys. Well, it's been a good discussion. I'm glad we finally got to meet. I have a funny feeling I'm going to be looking at Greek's live platform after this call is over to see how I can use it. But yeah, no, really, really good discussion. Appreciate you guys coming on, sharing your views. You're doing some great work in the space, helping us retail traders manage our money better and make sure we don't blow ourselves up. So thanks for coming on the show.
Thank you, Imran.
Thank you, Imran.
Take care, guys.
Cheers.
Okay, so yeah, good chat with those guys, huh?
Yeah, interesting. Everyone wants to talk about meme coins.
I mean, yeah, I mean, how can you not, right? This weekend was absolutely insane. I mean, with what Trump and his family did. Right?
Yeah, it's funny. I know we were speaking earlier about it. Like, you know, your concerns around it just kind of like discredits
it's disheartening. I think it's disheartening for people in crypto who are actually trying to build stuff in crypto, like that has longevity and actually has utility. You know, when they do that and then they see someone launches a coin and in 2 days it's the 12th biggest market cap crypto in the world, it's like, okay, what we doing here, right? But that's the free market. That's the problem. That's the free market, right?
And it's part of the fun of being in this space.
Yeah.
I mean, I get to put in as well as someone who's very, like with FR&T Financial, we're obviously very institutional focused, and yeah, you do feel like, look, we're trying to build a serious business here, and it's kind of distracting, and those that were doubters of the space then look at that and go, see, like we knew it was all load of bullshit.
But the point that Greeks Live made was that maybe the way we think and look at crypto, at meme coins, is the way that people in TradFi who aren't in the crypto space look at us, right? That we're just trading this thing that has no value, but only has value because people believe in it, basically, and that's how we view memes. Right?
Yeah, and there's like, I mean, the positives I took from it, you know, there's a few things on it, like firstly, I mean, how amazing is it for us in crypto, having battled against regulators and stuff, that the president of the United States is issuing meme coins on Solana, but it's kind of just shifting that Overton window like the whole time, right?
Yeah.
So I think that's interesting. I think also like it shows again a real like huge potential use case in terms of, you know, businesses and stuff that want to raise money. Like, you know, all of a sudden you can raise funds quite quickly on chain. So like I think again it just kind of highlights that, right? And there are you know, not everything's just a meme coin with zero utility, right? So I think it kind of brings, you know, sheds light on that, which is interesting. The other thing as well is like people keep telling me about, you know, we start thinking about, are we at the top of this bull market? You know, is there enough money coming into the space? The money's there if it's motivated to be there and to shift. And it was just a reminder to me that actually, even in like Bitcoin and everything, we've spoken about the lack of retail participation for a while, and which is kind of, I think it's dampened volatility a bit because we've got real institutional demand coming in, and that's why I'm so bullish this year, because I think that, you know, post like with Trump coming in, all that sidelined institutional cash is going to keep just filtering in, and it's just like a huge demand shock to the system. But we've not really had the silliness of like retail participation.
But to that point though, it seems like retail, like Raoul Pal, when we had him on the show, he was saying retail aren't interested in what Bitcoin's going to do because it might double in a year, but memes go up 20, 50x, right? So the spec money, so the spec money isn't interested in large cap crypto anymore. Yeah. It's like, it's not exciting enough. It's not, you know what I mean? It's not high octane enough. So like all of that spec retail frenzy gets sucked into memes, right? And then the instos are left to get involved with the large caps, right? And that's a slower moving train, right?
And it may be like a lot of I mean, zero sum game, I guess, like for those trading it, but a lot of money gets made, and then ironically, I think some of that then rotates into Bitcoin and like the larger cap coins, because like for your meme coin trader who just made a fortune in that space, he sees that as like a low vol sort of safe place to now almost capital preservation.
Yeah, true.
I'll stick that in Bitcoin.
Yeah, it's like defensive, right?
Yeah, this is my defensive strategy, holding Bitcoin, which obviously I was just as like 60 vol, 70 vol asset.
But now that Trump's coin pumped so much, I mean, I don't know how much it's given back. I know it's given back quite a bit from the highs, but do you not think if they were able to monetize some of this, and I don't know how much they've managed to sell, right? But I think they've sold some. Isn't it a no-brainer for them to then donate that money into like Doge and like pushing the initiatives that he's kind of won his campaign on, right?
Yeah.
Like things like that. Yeah, we've made like 500 million. Here you go. We're going to stick it into Doge, and we're going to make America great again. You know?
I think I'm pretty sure Mark Cuban has floated something like that. Why don't we do that?
Yeah.
Put out.
It's not like they need the money, is it? right?
No, exactly.
Yeah.
Although I don't know, his son looks like he looks like an evil genius, doesn't he?
Yeah.
Like,
Opposite of Mini Me. His son, right?
yeah.
Out of Austin Powers.
And apparently he's like a big driver behind all of this, right? As
Yeah, well, he's
quite
fair.
interesting. And you know, again, like long term, why I'm so bullish this space, there is. I mean, obviously, like we got this kind of aging population, and there's going to be a lot of wealth transferred to like younger generations, and that younger generation coming through,
They love a meme.
they love a meme, but like all this whole space in crypto just makes so much more sense to a younger generation.
Yeah, sure.
Like
It's not a foreign thing to them. It's like natural.
it's just
right?
natural, yeah.
Yeah.
And like, you know, I'm sure you have the same as me. I still have like conversations with former colleagues and stuff who are still like focused on but Bitcoin, you can't touch it. Like
Can't hold
it's
it.
not tangible. It's like
Who cares?
who cares? But they, you know, they
Yeah.
live in a digital world, like, and that's all they've ever known.
The physical world, yeah. Yeah.
But and sorry, like the younger generation coming through,
yeah.
like, you know, it's quite
Everything's
possible
digital.
someone never would have like ever touched cash. Everything's been on a card, like it just makes sense to them. And yeah, it's interesting that we're perhaps seeing the first signs of what the next generation. I mean, particularly if a Trump dynasty starts. Can you imagine?
You have like the family of meme coins basically, and they start stacking up the leaderboard of cryptos. I mean, it's going to be a bit of a joke, isn't it? But all right, on that light note, we'll call it a day for this week's episode. Don't forget to like and subscribe. We definitely want to get this sort of information out to as many people as possible, and we'll catch you guys back again next week. Cheers.